we're gonna do this. This is how we start off our shows. Okay, we start off on the left side, and we go. Hodl, hodl, hodl. Save, save, save. Build a, build a, build a. Sound money, sound money. All right. Hodl, hodl, hodl. Save, save, save. Build a, build a, build a. Sound money, sound money. Hey. Hodl, hodl, hodl. Save, save, save. Build a, build a, build a. Sound money, sound money. Hey. Hodl, hodl, hodl. Save, save, save. Build a, build a, build a. Sound money, sound money. All right. Save, save, save. Build a, build a, build a. Sound money, sound money. Save, save, save. Build a, build a, build a. Sound money, sound money. Hey. Save, save, save. Build a, build a, build a. Sound money, sound money. Hey. Save, save, save. Build a, build a, build a. Sound money, sound money.
Hodl, hodl, hodl. Save, save, save. Build a, build a, build a. Sound money, sound money. Okay, it's Ugly Old Goat here. It is August 22nd, 2024. And I just completed a article. We don't have it on our website yet, but it is on Medium. And I'll outline that in a minute, but let's go look at the markets. Not much is happening, but here we are. This is Bitcoin. This is your daily chart. Excuse me, I gotta sneeze. Woo, okay. All right. So guys, here we are. We're not doing much. Again, we're in this seasonal. This is the time you want to be accumulating Bitcoin. This is what we're looking at. The only thing that bothers me is everybody has the same consensus. They're all looking for the market to go up here, in 4 to 6 weeks. But, we just can't rule out that nobody's looking at a grinding bear market. And so that's still... we're not out of the woods by any case yet. And if you look, let's go look at the, this is Bitcoin on the Chicago Mercantile Exchange. And again, once again, this is a very weird formation. We've filled all the gaps. I'm just very neutral here. It could go either way, okay? I would tend to think that the bottom line looks like we should go up from here. We should not really, I don't think we should break those lows that we made in early August, but we'll have to wait and see. All right, we can just look at the stock market quickly. Again, very, very strong. We did not make new highs, but that's the biggest surprise to me. I haven't looked at gold since we looked at it last, but the gold market, we got a little break in gold, but this is not, and this kind of interesting because look at that. You had a green 9 on the daily, which says, hey, you can have problems in here, and this is what we've got to sell off today. So, okay, I'm not going to go into that much. I'm going to go into this article. I just finished this, guys, and I'll probably I might get some hate on the. From the Bitcoin maximalists, which I don't consider myself a maximalist because that is a term that was actually invented by the guy that created Ethereum. And so I realize there's an idea you adopt the insults that people give you. I understand that concept, but I think it's just an inaccurate term. So I much rather identify myself as a Bitcoin standard bearer. And I think this leaves open more possibilities. And this article actually is a major change in the way I'm looking at things. You know, when the stable coins came out, I didn't give them much credit. But if you're going to throw away your confirmation bias and willing to look at the real economics of the situation, this is something that I think every serious Bitcoin coiner has to learn. And there's sound economic reasons for this. Again, I have changed my mind, and one of the reasons that have changed it is because Aaron, how do I pronounce that? Sepúlveda. Aaron Sepúlveda, and he taught me that money is the most tradable or most saleable good and not the most valuable good. And money is a social institution we developed to cooperate with strangers. And then he adds to that, family and friendships are social institutions that we develop to cooperate with those we love. You know, and I'm working on that part. There's two parts to this. Money is is developed to cooperate with strangers, but social institutions, it's really, these social media is not doing the same thing as building cooperation with those that we love. Now you can. I think you can have family groups. I'm starting to learn that, where you can have little group family things on WhatsApp or what's the other one? Telegram. And those are very useful, things to develop your personal relationships with family members. But this economic principle that I learned from Aaron, it really throws water in the face of Bitcoiners who believe that Bitcoin is a peer-to-peer cash system. And of course, this was Roger Vere's contention when he forked Bitcoin and created Bitcoin Cash. Now, there's every reason to believe Bitcoin will continue to gain in value, but there is really little reason to believe that Bitcoin will emerge as cash, and there's very good economic reasons for this. Now, hear me out. You may not agree with me. Maybe you think we're gonna, Bitcoin's the only money it's going to evolve as cash, but all the economics point the other way. Even when we were on a gold standard, gold did not circulate as cash, except in one instance, and that was in a specific location at a specific time, and that was during the California gold rush. So cash emerges with the most tradable good, not the most valuable good, and for most of the world, the most tradable good remains the US dollar. In Europe, it's the euro. In China, it's the yuan. In Japan, it's the yen. In Mexico, it's the peso. In Russia, it's the ruble. This is an article that you can kind of click here. It's a really good article by Aaron that outlines importance of community in the creation of money. All right, and this is exactly what happened in California when we had the California gold rush. The most tradable commodity was gold. And because it was the most plentiful, and gold was common and everything else was dear. Now, according to what I call the Christian school of economics, Bitcoin cannot be considered money in El Salvador. Now, actually, Aaron calls it the Austrian school of economics, but I think if you check out the idea of Christian economics here, as outlined by Dr. John Robbins, I think there is a difference. And Christian economics can, I think, develop far beyond the limitations of Austrian economics. So the US dollar remains a medium of exchange, not because it is more valuable, but because it's the most tradable commodity, which fits in with the Christian school of economics. Now, this is really a hard lesson that Bitcoiners, and I'm the worst, I didn't get it. I'm just coming to recognize this now. As we grow, we change, we learn new things, and I think it's difficult to understand because, Well, early on, I thought you could have competing shitcoins with Bitcoin. I got rid of that, and then it's just Bitcoin only. But you have to understand that Bitcoin's not used as money; it's used as a store of value, something that it becomes dear and more dear, but will never circulate as cash. And I think it's unrealistic, and I think it's kind of becoming clear on that. I mean, a lot of people have tried. I mean, they're doing the Lightning Network, which kind of works, but not really. Of course, you have all these. Roger Ver had his Bitcoin Cash. You've had all of these other shit coins that they trying to push the string and make it into some kind of easy to use money. But that's not the most tradable commodity. The most tradable commodity still is the national currencies that people are used to. And so I think that building these stable coins has really created it's a market phenomena which you just can't ignore. And I think Gresham's law, now normally Gresham's law only applies when when you fix a price between, let's say, the dollar and silver or gold, and then this sound money or the crappy money drives out the sound money. Well, the same thing happens really with Bitcoin, because at any given time there is a fixed value between stable coins and Bitcoin. So the use case, you want to use these stable coins because it's the one that everybody else is using, and these stable coins are very inexpensive to transfer for wealth, and much faster. There's no doubt about it. So I think the bottom line is that the market always wins, and if we look at the market, by far the biggest use case for a medium of exchange is the US dollar stablecoins. And here's an article that outlines this. If you take the total volume of Tether, First Digital USD, and USDC, they each clocked around $58 billion, or respectively over about 72 billion. Now that's only compared with 34 billion for Bitcoin and 20 billion for Ether. Guys, this is a trend that we just cannot ignore. I mean, what's being used as cash is not Ether, and it's not Bitcoin. Bitcoin is substantially more than Ether. I think that will continue because Bitcoin is a unique store of value, and it's great for settlement purposes. But for day-to-day business, for fast transactions, it's these stable coins that have really taken the market by a storm. And it's just something that, and there's an economic reason for it. And I think, these people that develop these stable coins, they met a need, and they're providing a very real service in the market. Moreover, because money is the most tradable or saleable, not the most valuable commodity, the mega trend in stable coins is likely to continue and grow substantially. Now, due to the sanctions, Russia is actually, I think, beginning to understand this. What the world has meant for evil, the School for Christian Economics recognizes as a long-term benefit for the Russian ruble. And here Russia is to allow payments in international trade to counter the sanctions, which is exactly, they can use these stable coins rather than going through the central banks and they have a way of not going through the centralized banking system where the United States is trying to punish them and seize their assets and so forth. Now this applies to individuals as well as governments. It should be noted that Bitcoiners, we tend to push the string to force some kind of crypto cash. I think we've done that with Lightning Network. I think the most clearly visible case was in 2018 when Roger Ver was really upset because he thought, well, Bitcoin is supposed to be peer-to-peer cash, and that was the original intention. But the economics just says that if it becomes the most valuable commodity, it's not going to be cash. Just like gold was never cash, the gold substitutes were cash. So what Roger Ver was doing was he was kind of pushing the string, trying to force Bcash into being used as money, and it just didn't work. And pushing the string, it's a metaphor for the limits of monetary policy. Money policy sometimes only works in one direction because businesses and households cannot be forced to use money if they don't want to. You know, Bitcoin Cash was a fine idea. I get it, Roger Ver, but you were pushing the string. You thought that, hey, I got this thing that works, and the whole world should see it, and you saw it, and you had a little cult of followers that saw it. But in reality, most people still use the U.S. dollar. I'm in Mexico, so the U.S. dollar is common here at the border, but in far greater use is the Mexican peso. Now, in my 2018 article on the gold standard versus gold cash, I did outline how gold uniquely emerged organically as money during the California gold rush. And this was due to a unique locality and a situation. You had these new gold discoveries. People, abandoned the ships in San Francisco, went up into the hills and started mining gold. And there was lots of gold there, but because there was lots of gold and nothing else, gold was cheap and everything else was dear. And so gold actually during the California gold rush in California was one of the rare times that gold was actually used as cash, commonly used as cash, because it was the most tradable commodity. Now, it wasn't worth much compared to what it was everywhere else in the world, because there was lots of gold in California, but somehow they had to get it back to New York or to Hong Kong. I don't know if it was Hong Kong was in existence then, but they had to get it, back to Europe. Or Asia, where the value of the gold was more than where it was plentiful in California. And this is exactly the situation that Aaron outlines in the importance of community and the creation of money. What happened during the California gold rush is the community, all these 49ers got in there and they said, hey, we need to have this gold. It's all over the place, and it was the most tradable commodity, and so it became the money. Unlike on the East Coast, where you could use gold, but it was not ever really used as money in very few cases. I mean, it could be used, but it just never was used. So my whole point is that there's this organic megatrend, and it's emerging. And I didn't realize that this is happening until this last week, but they have actually now created a Mexican peso stablecoin, a Russian ruble stablecoin, Japanese yen stablecoin, euro stablecoin, and they're actually proposing a Chinese yuan stablecoin. And this is an emerging organic phenomena. And as this emerges, I think it's possible that sanctions and blocked funds may be a thing of the past, because you can transfer these things. It's not limited to the national borders. And this is a trend that I don't think any Bitcoin should ignore. So anyway, and I'm going to next outline this, how I think these competing stable coins may very well result in the resurrection of a gold standard and a reciprocal Bitcoin standard, both interacting to create global sound money. I think this is something that we just really need to look at because it's happening. And I don't, again, the company I know, Bitfinex, has developed this Mexican peso stable coin. It's not widely traded, very thin. It's not really practical yet. And the other problem is that in Mexico itself, it's quote, it's legal in the world, but you cannot really upload it or download it in the banks in Mexico. So this is the whole thing. We really need to denationalize these banking systems. So, and I think that's, hopefully that's an idea that is coming. But I think, and I think my family is learning this too now. My daughter's out there hustling at the flea markets, all these markets, selling her little stuff. But the business is not done in Bitcoin, and we've tried. And a lot of people have tried, but it's just not going to emerge in that way. It has to be organic, it has to be natural, and it can't be forced. So I think that the these the most useful currency is going to depend upon your locality. And like I say, I'm in Mexico, so the most useful money, the most tradable commodity is the Mexican peso. The second most useful commodity is the U.S. dollar. Now you can use Bitcoin's tradable, very, very much is, but you know it's not. It's certainly something you can't use to buy a cup of coffee. Maybe you can with the Lightning Network, but it's still pretty clunky. And these stable coins, you know, I started using them. They're fast. They're immediate, and just something that, you know, let's be practical. Let's look at the economics on it. I mean, Bitcoin's a great store value, but it is not money. It's not the most tradable commodity. Do we have it's never too late for Bitcoin up here? Okay. All right, guys. Well, let's see if I can find that. It's never too late for Bitcoin. Well, I'll just end with that. It's never too late for Bitcoin, guys. We recommend dollar cost averaging. And like I say, if you dollar cost average, you've actually done better than Michael Saylor in the market. Michael Saylor has a average cost of about $35,000 on his Bitcoin, whereas if you actually use a fixed amount even at the last peak, and you've actually done better than Michael Saylor has. So the key is you need to have that discipline and be buying a fixed amount of Bitcoin every month. All right, I hope that helps you guys. This is Thursday, so we won't be back until Monday. Again, we're looking at, here's the, again, this is not, this is kind of neutral. This is what I look at the basis rate. The funding is not bullish. The hedgers, you know, they did pull a lot of their hedges when the market sold off. But the key is, you know, let's go look. I want to look at this weekly. Okay, yeah. So here it's just very unclear what we're going to do here. Probably not going to do anything till September, and we're just in the doldrums. And but check that out. Check out the article. We do not have it on Ugly Old Goat yet. We'll put that on today. So if you know, that way you can see it free. I think in Medium you're limited to 3 articles. But I like to write on Medium. It's just easier than using my own website, and then we transfer it all over. All right. Well, thank you for tuning in, and we will see you on Monday. Bye-bye.